What's up, traders? Welcome back to Explain the Charts. Today, October 9th, 2025, we're diving deep into Ethereum, or ETHUSD. We'll cover the latest breaking news and then jump into a full technical analysis of the charts to see where the price might be headed. First, let's look at the headlines because there's a lot happening. Multiple sources are pointing to a potential short-term dip for ETH before a rally to new highs. Yahoo Finance specifically mentions a possible 6% drop to around $4,410 to complete an inverse head and shoulders pattern. This is a classic bullish reversal pattern, so a dip wouldn't necessarily be a bad thing for the long-term outlook. Cointelegraph reinforces this, noting a short-term correction might be underway before a larger upside move, fueled by favorable liquidity and potential Fed rate cuts. Institutional interest is a massive theme right now. Grayscale has enabled staking for its Ethereum ETFs, a first in the industry, and has staked over $150 million worth of Ether. This move is seen as a huge confidence booster, effectively turning their ETFs into income-generating assets. We're also seeing huge corporate accumulation, with companies like Bit Digital and Bitmine now holding a significant portion of the total ETH supply. In fact, treasuries and ETFs now reportedly control over 10% of all Ethereum, which shows just how serious the big money is getting. Whale wallets are also accumulating, with one report from NewsBTC noting 16 wallets buying $1.73 billion worth of ETH between September 25th and 27th. This institutional and whale buying is happening despite a large validator exit queue, suggesting new, larger players are stepping in to replace those leaving. So, the macro picture is quite bullish, with big players showing strong conviction, but the immediate sentiment suggests caution and the possibility of a healthy pullback. Now, let's see how this news translates to our daily chart. Looking at the full picture, we can see a massive run-up that started around early August 2025, taking us from below the $3,500s all the way up to recent highs near $4,700. This aligns with reports of a strong Q3 performance for Ethereum. We peaked around September 12th near $4,716 and have been in a period of consolidation and pullback since. The price has formed a clear support zone around the $4,000 to $4,200 level, which we tested on September 22nd and 25th before bouncing strongly. This bounce is what started the most recent leg up from around $4,000 to our current price levels. The recent price action near $4,700 shows some hesitation. We see a strong push-up on October 6th, which the Motley Fool attributed to Bitcoin hitting a new all-time high and the Grayscale staking news. However, the following day, October 7th, we saw a sharp rejection with a long upper wick on the candle, closing much lower than its high. This indicates significant selling pressure at that resistance level, which is just below the previous high. Yesterday, October 8th, we had a positive day, but today we are seeing some weakness again. This price action is exactly what the news articles are describing, a pause near a key resistance level. The resistance to watch is clearly the $4,740 to $4,770 zone. A decisive break and close above this level would invalidate the short-term dip thesis and signal a continuation of the uptrend, likely targeting the previous all-time high near $4,950. Now let's talk about that inverse head and shoulders pattern mentioned in the news. If we consider the low in late August as the left shoulder, the deep sell-off on September 22nd as the head, we are currently forming the right shoulder. For this pattern to play out, we would need to see that dip towards the $4,410 area, which would act as support. That $4,410 level is crucial because it was a key resistance area during the climb in early September and should now act as support. A bounce from there would strengthen the bullish case significantly. On the bearish side, a breakdown below the recent low of $4,411 on October 8th would be the first warning sign. A more significant bearish signal would be a close below the $4,270 level, which would invalidate the inverse head and shoulders pattern and suggest a longer period of consolidation. The support level below that would be the psychological $4,000 mark, which aligns with the large whale accumulation zone mentioned in the news. Let's zoom in on the price action since the beginning of September to get a clearer view of this potential pattern. Here you can see the peak on September 12th, followed by the sharp drop to form the head of our pattern around $4,000. The climb back up was strong, but we can see the struggle right here at the neckline, around $4,740. The candles from October 6th and 7th are telling a story of a battle between buyers and sellers. The bullish momentum from the grayscale news was met with heavy profit-taking, confirming this as a major resistance zone. Today's candle is currently red, suggesting the sellers might be gaining control in the short term, which supports the dip thesis. We need to see if bulls can defend the $4,410 level if we get there. Switching to the 1-hour chart gives us a more granular look at the recent price action. Here we can clearly see the explosive move up on October 6th, followed by an equally aggressive sell-off. The price has since been trading in a range, forming what looks like a descending channel or a bearish flag pattern. This is a short-term bearish continuation pattern, which adds more weight to the idea of a dip. Immediate support on the hourly chart is around $4,480, which we just tested in the last few hours. A break below this level would likely lead us down to the next major support zone around $4,410, which is our key level from the daily chart. On the upside, we need to break out of this descending channel, which means getting above the $4,580 resistance. A break above that could signal a retest of the major resistance at $4,740. The volume has been tapering off during this consolidation, which is typical before a significant price move. Traders should watch for a volume spike on a break of either support or resistance to confirm the direction of the next move. For day traders, let's quickly look at the 15-minute chart. We can see the price is very choppy, moving between about $4,480 and $4,530 in the last several hours. This tight range suggests indecision in the market. A break below the $4,480 support would be a short-term bearish signal for scalpers. Conversely, a move above the $4,530 resistance could offer a quick scalp opportunity up to the next resistance, around $4,560. Pay close attention to volume on this time frame, as a breakout on low volume is more likely to be a fakeout. Alright, let's switch back to the daily chart and recap everything. The long-term sentiment is bullish, supported by strong institutional and whale accumulation. However, the short-term technicals and news analysis suggest a potential pullback is on the table. Here are the key price levels to watch. Major resistance is at $4,740. A break above this is highly bullish and targets $4,950 and new all-time highs. Key support is at $4,410. This is the level bulls need to defend to complete the bullish inverse head and shoulders pattern. A break below $4,270 would invalidate the immediate bullish setup and signal further consolidation. So, here are a couple of potential scenarios. Scenario 1. Bullish continuation will give this a 40% likelihood. The price ignores the dip thesis, fueled by more positive news or strong buying pressure, and breaks decisively above $4,740. This would be reinforced by high volume and a strong daily close above that level. Scenario 2. Healthy correction, with a 60% likelihood. The price follows the short-term bearish patterns and dips to test the $4,410 support. We'd look for a strong bounce off this level, with bullish candle formations on the daily or 4-hour chart to confirm the next leg up. This scenario seems slightly more probable given the recent rejection at resistance and the patterns on lower timeframes. Upcoming events to watch for would be any SEC announcements regarding altcoin ETHUSD this month, as mentioned by Cointelegraph, which could act as a major catalyst. Always watch Bitcoin's price action as well, as it continues to have a strong influence on Ethereum. That's our analysis for today. Remember, this is not financial advice. Cryptocurrency markets are extremely volatile, and you should always do your own research and risk management before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you in the next one.